Thank you for clicking on this video. This is going to be once in a lifetime opportunity for you to build generational wealth, because now could be the best time to increase your net worth by investing. As Warren Buffett says, never depend on a single income. Make an investment to create a second source. So investing is a vehicle that most people like Warren Buffett utilize to achieve financial stability. If you stick to the end of this video, I'm going to share with you the very best investment options that can help you beat high inflation and rising interest rates. So stick around to the end of the video. Before we jump deeper into the video, it will mean a lot to me if you hit the like button and subscribe if you've not done that yet. Here is a question that many people ask: why invest? Investing can provide you with another source of income and can fund your retirement. But the main reason why one invests is to grow wealth. By doing so, you'll be in position of meeting your financial goals and also increase your purchasing power. When it comes to investing, one has options. Some are safer and some are riskier, higher return investments. So here are 10 best investment options that you can choose from based on your financial goals. 1. Short-term certificates of deposit. So certificates of deposit, also called CDs, are issued by banks, and these generally offer higher interest rates than savings accounts. For any person who wants a safer investment, short-term CDs may be a better option when you expect rates to rise, allowing you to reinvest at higher rates when the CD matures. Certificate of deposit are a good option for any retiree who doesn't need immediate income and can lock up their money for a little bit. A certificate of deposit works well for risk-averse investors, especially for any person who needs money at a specific time. Although CDs are considered safer investment options, they do carry reinvestment risk. But the reward of certificates of deposit, that financial institutions where you hold your CDs pays you interest at regular intervals. Once your CD matures, you get your original principal back and unaccumulated interest. The second investment option is high yield savings accounts. For starters, a high yield savings account pays you interest on your cash balance. It is a good option for anyone who wants to access their money in a near future. It is worth mentioning that high yield savings account is a good option for risk-averse investors who want to avoid the risk that they won't get their money back. While high-yield savings accounts are considered safe investments, it is important to note that there is a risk of losing purchasing power over time due to inflation if rates are too low. With a high-yield savings account, you have an advantage of accessing your money quickly by transferring the money to your primary bank account. 3. Short-term government bond funds. First and foremost, short-term government bond funds are mutual funds that invest in debt securities issued by sovereign governments and their agencies. Short-term government bond funds are good for low-risk investors. These are especially good for beginning investors. Government bond funds are well suited for risk-averse investors. So for anyone looking for investment options, short-term government bond funds are a good option to consider. 4. Short-term corporate bond funds. There are different ways corporate entities raise money to fund their growth. Some do this by issuing public offers, and others offer bonds to investors, among other options. So short-term corporate bonds have an average maturity of 1 to 5 years. This type of bond fund is good for risk-averse investors who want a little more yield than government bond funds. The shortcoming of corporate bond fund is the chance that the company will have its credit rating downgraded and run into financial trouble and default on the bonds. To reduce the risk, make sure your fund is made up of high-quality corporate bonds. But the advantage is that corporate bond funds offer higher rewards for investors than government bonds. But remember, greater rewards come with higher risk. So do your homework to see which investment option is best for you. This leads me to the next investment option: S&P 500 Index Funds. This fund is based on 500 American companies, which means it comprises many of the most successful companies in the world. For example, companies like Amazon, Apple, Microsoft, Tesla, to mention but a few. These are some of the prominent member companies in this index. For any investor who wants to achieve higher returns than most traditional banking products. A good alternative is S&P 500 index fund. But keep in mind, it comes with more volatility. An S&P 500 index fund is a great option for any investor looking for a diversified investment and can stay invested for at least 3 to 5 years. Keep in mind, the S&P 500 is one of the best index funds. This brings me to the 6th investment option: dividend stock funds. The first thing to know is that dividends are portions of the company's profits that are paid out to investors, usually every quarter, but it also varies from company to company. Keep in mind, buying individual stocks comes with risk, but as an investor, you can buy a group of them in a stock fund and reduce your overall risk. It is worth mentioning, as with any stock investment, dividend stocks come with risk. If you are looking for investment options, make sure you invest in companies with a solid history of dividend increase rather than selecting those with the highest current yield. That could be a sign of upcoming trouble in the company. Nevertheless, you eliminate many of these risks by buying a dividend stock fund with a diversified collection of assets, reducing your reliance on a single company. 7. Value stock funds. As we are well aware, stock valuation goes up and down from time to time, and this may cause investors to wonder where they can put their investment dollars. Value stock funds is a good option for such investors. It is worth mentioning that value stock funds tend to do better when the interest rates rise. For investors who love dividends, value stock funds pay out dividends, so that's an additional attraction to such stock funds. 8. Nasdaq 100 index funds. The Nasdaq 100 index fund comprises the biggest tech companies. So an index fund based on the Nasdaq 100 is a great option for investors who want to have exposure to some of the biggest and best tech companies. This fund comprises of companies like Apple, Alphabet, Microsoft, Amazon, to mention but a few. This means that the companies that are found in the Nasdaq 100 index fund are some of the most successful and stable companies. This is a great investment option for any stock investor looking for growth and willing to deal with significant volatility. But like any other stock fund, it is always a rule of thumb to hang in there for 3 to 5 years. Keep in mind that the stock prices go up and down, but Nasdaq 100 index fund has some of the most strong tech companies. These companies also are usually some of the most highly valued. So you can have a little relief knowing that you have invested in some of the strong and sound tech companies. The immediate advantage of Nasdaq 100 index fund is that it offers you diversification, so your portfolio is not exposed to failure of any single company. This brings me to the 9th investment option: rental housing. For starters, rentals are a very good investment option for anyone who is willing to manage their properties. To pursue this investment route, you will have to select the right property and choose the right finance options, which could be either finance it or buy it outright. And also be prepared to maintain it and deal with tenants. You can do very well if you make smart purchases. With that said, rental housing is a very good investment option for any long-term investor who wants to manage their properties and generate regular cash flow. But be ready to respond to any calls from any tenant regarding maintenance like a broken pipe. Despite that, if you hold your assets over time and slowly pay down your debt and grow your rentals, you will likely have a powerful cash flow when it comes time to retire. This leads me to the last but not least investment option: cryptocurrency. To get you up to speed, for those who don't know, cryptocurrency is a kind of digital electronic currency that is intended to act as a medium of exchange. In the last few years, it has become a hot property. The most widely available cryptocurrency right now is Bitcoin, and its price fluctuates a lot, attracting many traders. It is not a good option for any risk-averse investor or any other investor who seeks safe investment. One thing that you need to be aware too, that traders run a risk of being hacked and could lose their investment just like that. So if you're looking for investment options and you want to grow your wealth, you would want to consider several factors, including your risk tolerance, your time horizon, your knowledge of investing, your financial situation, and how much you're ready to invest. As an investor, if you're looking to grow wealth, you can opt for lower risk investments that have a moderate return, or you can take on more risk and aim for higher returns. Please keep in mind there's typically a trade-off in investing between risk and returns. Or you can take a balanced approach by having a mix or different investment options. Before I go, please help me help others by hitting the like button. In this way, YouTube will recommend this video to new viewers. And subscribe to the channel if you've not done that yet. And please turn on the notification bell. In this way, YouTube will notify you every time we upload a new video. As always, I appreciate you stopping by. Until next time, shalom. Also consider watching our other videos on my left.